In the lead up to the last halving, which happened in May of 2020, I did like a cash out refinance on the investment property I bought when I was 19, because rates were at record lows. It seemed like a kind of win-win opportunity. Use that money from the equity wedge that I had kind of exploited in that first property to double my portfolio. And
so you took that money and invested into crypto with it?
Yeah, in the lead up to the halving, because I thought we were about to go into another cycle.
Did that work out for you?
Yeah, so it's been great.
I mean, I don't know how transparent you're willing to be, but I mean, can you give us an idea?
Basically,
are you a millionaire off crypto?
Yeah, for sure.
Hello, everybody, and welcome to another episode of the WHOA GNV podcast, the podcast bringing you businesses and individuals that make you go, whoa. I am your host, Collin, and this podcast is possible because of the support from my friends, the GNV commercial advisors at Colliers Gainesville. Have you noticed those blue collar signs all over Gainesville? They are even out here in Alachua in front of San Felasco Tech City, where we are recording today. Those are the signs of progress. The GNV commercial advisory team of Colliers Gainesville is the region's top commercial real estate team. When you need to buy or sell commercial land or buildings, find a new space for your business, or lease out a property you own, turn to the GNV commercial advisory team. They close more than 60 deals a year. Shouldn't yours be one of them? The answer is heck yeah, y'all. Check out all their services at colliers.com/Gainesville. I also want to encourage you guys as we head toward the holiday season to donate to the Bread of the Mighty Food Bank. When you donate to the Bread of the Mighty Food Bank, you make an impact. Every donation provided, whether it's monetary or food products, helps Bread of the Mighty put food on the table for the families who need it most. Thank you to all the donors for their generosity. And for those interested in helping, please reach out. With your help and donations, we can all work to fight hunger in our community. You can donate today at www.breadofthemighty.org. And podcast fam, again, you can see that our set is a little different today because today we are out in San Felasco Tech City for the Startup South event. This is where Florida's leading founders, investors, executives, and media have been gathering for an epic program of interviews, pitches, music, and great food. If you missed it this year, be sure to stay tuned for all of it by going to startupsouth.net so that way you know when it's happening next year, because you're not going to want to miss it. It's been great. And there's going to be some pitches tonight. I'm excited to see that, and I've had already a bunch of awesome interviews, and it's been great. So let me introduce to you our guest for today. Today on the show, we are joined by Alex Copeland, a serial entrepreneur with over 6 years of experience investing in blockchain technology, focusing specifically on smart contracts and NFTs. He's a blockchain advisor for the social media startup Starstruck. He has 5 years of experience as a real estate investor and obtained a double bachelor's degree with honors in economics and philosophy. Alex, welcome to the show, man.
How's it going?
Great. I'm excited to have you on, man. I'm excited to dive into this and unfold this and hear the life of Alex Copeland.
Fair enough.
Do you like the term serial entrepreneur? I asked my friend Eric Zika earlier when we were recording with him. Do you like the term serial entrepreneur?
Not really. I mean, I don't know. I kind of have mixed feelings about it, I guess. I feel like that term kind of gets a bad rep.
Would serial investor be a...
That's probably better. Yeah, that's probably a much better term.
So tell me a little bit about your story. Like where you're from, like...
Sure. So I'm from New Orleans originally. Grew up there. Moved to Tampa during high school. And yeah, basically just got started with startups in the social media marketing space initially. That's kind of how I ran into Collective & Co. We worked with them for a little bit on a startup called Bridge, which was essentially trying to aggregate influencer marketing into like a single platform kind of before that had become a big trend in marketing, and kind of make a automated system for companies that were looking for influencer marketing, but they didn't really know exactly how to get into it. They didn't want to just go and call on individuals and try to work out pricing structures just arbitrarily. And so we kind of automated all that into a system. We ran that for a while. And basically during that time, that was about 2017. So it was like maybe 18 at the time. Just got really invested into smart contracts, all sorts of Web3 related industries. And We realized, I mean, in essence, from my side on the back end, from a tech side, that the infrastructure for Web3 wasn't there at the time, but really that was a lot of the problems that we were facing could have been solved from just a smart contract blockchain perspective.
Okay, really quick, because now you're throwing out terms that not all of our audience is going to understand. So let me just back up a little bit. So what happened with Bridge?
Yeah, so we ran Bridge for like 3 years, and then the team kind of just parted ways, and it's still, doing whatever, but we just kind of moved on to different things.
Okay.
But yeah.
And so tell me, like, smart contracts.
Mm-hmm.
When you say the term smart contracts, what do you mean?
Sure. So basically, in the blockchain industry, there's different layers of what that tech kind of accomplishes. Obviously, Bitcoin is kind of the first iteration of blockchain tech almost for its own sake. So you have a system where you just have a kind of blockchain in its most basic form. Just a blockchain in essence is just a chain of blocks of transactional data that are linked together chronologically, and are immutable, very difficult to like tamper with, and distributed. And so that's like the essence of a blockchain. And then on top of that, around 2014, 2015, you get things like Ethereum come out, which basically take that concept to a deeper level and enable, through that same technology, concept of a smart contract, which you could think of essentially as, the way I typically describe it, it's almost like a trustless like escrow account. And so basically it's a way to eliminate trusted third parties, which the modern digital world has become increasingly dependent on. And the reason that they've become increasingly dependent on these trusted third parties is because as we move from the physical to the digital space, with layer 2 internet, just the kind of traditional internet of social structures and communication networks, it's very difficult for any individual to have custody over data or assets or wealth. And so we solve the custody issue by depending on the trust of some sort of objectively trusted third party. That's why, like, for example, like typically if you're holding money in a digital form, it's always, unless it's in some kind of blockchain capacity, it's going to be held in some sort of third party, like a bank or like a proxy for a bank or like your company's account. It's never going to be held in the same way that you could physically hold cash. And so smart contracts and blockchain basically kind of open the floodgates for the ability to create a third layer, like Web3, on top of the existing internet, with the ability to hold custody, transact anything that you want to do with both data, wealth, any kind of tokenizable value, essentially. If that makes sense.
Where did you learn all this?
Just, I've been like really interested in the space since I was like 17. I'm like 23 now, so it's just kind of been a learn as you go kind of process, Okay,
so, transitioning away from Bridge and that startup, getting into this, like where are things at now? You just became an avid investor into the things happening with blockchain, like? Yeah,
well, I just so basically since I was in high school, I wanted to like, my goal for entrepreneurship and investing and all of that was I wanted to make enough money as quickly as possible, essentially, to where I could focus on education at like a higher level. Like I wanted to be able to go and like learn things for the sake of learning them without having to kind of worry about economic like strife and stuff like that. And so my thesis for that in high school was just to try to identify like the only way you can make money investing is by identifying inefficiencies in pricing, and the main way that happens is just by identifying like asymmetries in information, I thought. And so it seemed to me that the category where that was most like prevalent was probably disruptive technology, because typically has a high barrier of entry from a knowledge standpoint. Very few people know about the general back end of that kind of stuff, and it's incredibly disruptive in a practical sense. And there's usually a decent lag for people kind of coming to terms with something that's truly innovative. And so it gives you an opportunity for exploiting asymmetry. And so I got into all sorts of like disruptive tech things when I was just investing with money that was coming in. Things like, CRISPR, like genome editing, things like, EV markets, just different like renewables, and blockchain. And I just kind of the more I learned about blockchain, basically the more attention that just kind of took up, because it just became like a black hole that just kind of sucked all my attention into it, because it just seemed so objectively like transformative that it was hard to focus on anything else. And So yeah, instead of like checking accounts in high school, I would just use like Bitcoin and blockchain and like Ethereum wallets, and I would just like put money in whenever I could, and over like maybe like the last 2 years, I've been able to kind of grow like relatively small like 5-figure portfolio into like well into like the 7 figures, and now I'm basically trying to incorporate that as like an investment vehicle.
Okay, so can you break this out for me a little bit?
Sure.
All right, so you're 17 years old. Where's the original? Where's your money come from?
Yeah, so just from
was it bridge and then you were investing, because you were investing into like crypto and some of these things earlier than when you got involved?
So bridge was like probably my like third startup that I'd worked on.
Really?
I'd done sort of like all sorts of different side jobs probably like since I was like 14, 15, and yeah, just like essentially any money that I would have come in from any kind of avenue was just going into blockchain. I went through real estate licensing right out of high school, bought my first investment property as like an equity wedge flip essentially when I was 19.
Is this a part of your life where you're just like, okay, I'm going to be, I'm just exploring. I'm exploring my interests. So you're not sure what you're going to do with the rest of your life type of thing? Or
my initial intention was I wanted to go to do a master's degree in philosophy, because like I've been obsessed with formal philosophy since I was like 11 years old. And so I wanted to make like enough money to be able to justify something like that, which is going to have no monetary incentive. And so that was kind of the goal for like being super focused on those kinds of things. And I was just looking for any avenue where I could exploit opportunity in the short term, basically.
Okay. And so you did that. I mean, you were an early crypto investor.
Mm-hmm. Yeah, I think I started buying Bitcoin around like 900 or so. Ethereum around like
How long had like
90.
Bitcoin been a thing by the time you started buying it?
Bitcoin got launched in 2009. About like an initial price point of like 10 cents or so. But like the only person mining the network for the first year was pretty much Satoshi Nakamoto, like the anonymous founder. Bitcoin has goes through cyclical like 4-year trend cycles, which are catalyzed typically by just the way its price action's been coded. Like every 4 years, Bitcoin's supply, its reward supply for mining gets cut in half every like 210,000 blocks on the chain. And so you can pretty much front run the euphoric market cycles by understanding when those halving events are coming on, and then realizing that there's typically about a 3-year period or a 3-month period where just from basic supply and demand standpoint, liquid supply on exchanges is getting dried up because incoming supply is getting cut in half, and then that typically creates a positive feedback loop for price. And so Bitcoin went through its first sort of market cycle in 2013. After the halving, went into its second one in 2016-17. After the second halving.
And so during this time, are you just buying it up?
Yeah, well, I'm just trading the macro cycles basically. So like you're buying when, and there's a lot of like, the cool thing about blockchain is all of the data is transparent, because you can go on chain and you can look at basically any aspect of that monetary system that you might need to know from an investment standpoint. You can see the amount of liquidity coming in, you can see the amount of long-term holding that's moving, you can see where the money is moving. And so it's really easy to front run on long time scales by just buying when you're undervalued within some sort of like bear market in the lead up to a halving event, and then just selling the tops when you're in kind of euphoric periods. And that's kind of just been the strategy, essentially.
I'm mind blown. So, because I'm just like, I look at my, my entrepreneurial career. I'm just, I'm a guy who had a scooter shop. I saw an opportunity. to help college students get to and from class, and started a scooter shop. And,
that's still
and then
a great
I hear all this stuff. I'm like, dude, like why can't I have that kind of mind?
No.
So, all right. So, how much, at a $900 price point, how much Bitcoin did you buy? Did you have a lot of it?
Yeah, like a decent amount, I would say. And, I kind of got screwed a little bit in the first major cycle top that I was in.
Which was when? Like how much was it?
2017.
How much was it when that happened?
Bitcoin topped out at about 20,000 in 2017. So that was the last 4-year cycle. We're in the middle of one like right now. And so it's like really exciting time for blockchain, especially just the amount of crazy innovation development that's going on in Web3 on top of these smart contracts. But yeah, essentially basically rode that back down because I basically missed a lot of the on-chain data. I was pretty new to it at the time. And then just kept, passively investing through the bear market into 2018, 2019. In the lead up to the last halving, which happened in May of 2020, I did like a cash out refinance on the investment property I bought when I was 19 because rates were at record lows. It seemed like a kind of win-win opportunity. Use that money from the equity wedge that I had kind of exploited in that first property to double my portfolio. And
so you took that money and invested into crypto with it?
Yeah, in the lead up to the halving because I thought we were about to go into another cycle.
Did that work out for you?
Yeah, so like it's been great.
I mean, I don't know how transparent you're willing to be, but I mean, can you give us like an idea? Like,
I mean, so like basically,
are you a millionaire off crypto?
Yeah, for sure. So like, essentially, like, so like a good example is like basically in March of 2020. That was when I basically did this refinance. My total crypto portfolio was about 80.
So that was a year ago. A little over a year ago.
Yeah. So like my total crypto portfolio was about 80,000
at that time.
Now it's like a little over. It's like around 2 million right now, I think. And so like, it's like 13 months or so, just kind of like being able to outpace the crypto market by focusing in on like niche innovations going on in that space, like decentralized finance and NFTs and all of that kind of stuff.
Is it hard when, when you see everything that's happening, because like what Bitcoin's at kind of an all-time high right now, right? 60s.
Yeah, it just broke all-time highs yesterday. Got up to like 67 grand.
And for everybody who's listening, it's we're recording this on October 21st. So, okay. Because who knows, by the time this goes out, maybe it's back down here.
Yeah, absolutely.
All right. So is it hard not to like grab everything and go throw it into crypto?
Yeah, pretty much.
I mean, are you one of these guys that's like, okay, let me be smart about it. Let me definitely diversify my portfolio, or let me go all in on cryptocurrency.
No, the way I like focus on it now is basically I dollar cost in when like the on-chain metrics that I use are showing undervalued, and then I dollar cost out once we start going overvalued. And so from that perspective, you can kind of you can average your entry price in in good terms during bear markets, and then you just start scaling out your position size, diversifying into things like real estate, equities, whatever, when you're getting closer and closer to the market cycle top, which is usually pretty obvious, but it's impossible to call it exactly. And so you just kind of scale out periodically.
Just because there's been some conversation happening around this as of late, what are your thoughts about like government involvement in the crypto space?
Yeah, I mean, I think regulation is like inevitable, and I think it's a good thing objectively. Gary Gensler has like a deep background in blockchain. He used to teach blockchain at university, and so if anybody's going to be regulating it from an SEC perspective, it makes sense that it would be somebody like him. I think the U.S. has done all right with it. I think Congress is like really behind the times in most innovation. If you just track the average age of Congress, it's just increasing at a rate that's like not sustainable for the exponential growth curve of technology that we're in right now. There's no way they're going to understand a lot of what's going on in a way that's accurate enough to regulate it efficiently without essentially like suffocating innovation. But I think they've done an all right job with it so far,
Okay.
I don't think anything's been too bad.
So do you live like a pretty like humble life, or are you kind of like, cashing out crypto and buying a Ferrari or anything?
No, it's nothing like that.
How does this, how does this impact? Because how old are you now?
23.
23. So, I mean, you've done really well for yourself. Congratulations. It's amazing.
Thank you.
But, when I was in college, I was like, oh, by the time I'm 30, like I'm gonna have a Porsche, blah blah blah. And it's funny because like obviously as life goes on, I was like, oh dude, I ain't buying any of that crap. I'm keeping my Honda Civic because it's paid off, you know. So I mean, my perspective has definitely changed as I've grown and gotten wiser. You know, I'm 39 years old, so I'm still driving a Civic. So
fair enough. Yeah.
You know, so but I'm just kind of curious, like how, you know, are you just like, no, let me just keep investing, or do you pull out and, you know, buy more? Like, have you bought more real estate? Like, what have you done at this point?
Yeah, I just bought a house not too long ago, which was kind of my first big pull from like profit this cycle. But I mean, I try not to buy anything extreme that I can't justify as like an investment, essentially. So like if there's overlap and something that's like pretty cool and like fun, but like it's also like I can justify it as an investment, then like that's one thing. But no, I haven't like pulled out to buy anything that's like a waste
just
of
a
money,
waste.
basically. Yeah,
you're not gonna waste it,
right? Yeah, no, nothing like that. I'm trying to basically like build up enough liquidity essentially to incorporate it into an investment vehicle. That's basically been my plan since I was like 18 or so, to try to be able to do a capital raise for like a small scale hedge fund by the time I was like 29 or so. And stuff has just moved faster than we expected. Kind of the like small scale team I put together to try to build out that plan over a 10-year period. And so right now we're working on essentially just I'm working on essentially trying to generate enough liquidity in there to where I can bring on things like analysts, bring on things like developers, and just kind of have an entire crypto operation sort of in-house on the front end and the back end, essentially. Cool.
This is awesome. Talk to me a little bit about NFTs and like, you know, this is, I mean, at least for me, it's fairly new in terms of a term I've heard. I don't know how long has the term NFT, I feel like maybe it went kind of mainstream in the last year.
Yeah, absolutely.
You know, like, can you first explain what it is for our audience that might not know, and then tell us a little bit about what you're doing there?
Yeah, so like an NFT is just a non-fungible token. So fungibility essentially means like you can think of it as something that is, so for example, if you have like a bunch of $1 bills or something, they're all worth the same amount of money. Each individual one has no unique property in theory. So they're all fungible. If you have something that's non-fungible, each individual aspect of that is unique and can be proved as like a unique thing. And so NFTs are kind of a logical step for the build out of the tech of smart contracts, just the way they operate, especially just like something like Ethereum. And so basically they started as just like collectibles, because that's kind of the easiest use case of an NFT. You just make, you can think of it almost as like baseball cards or something. It's like kind of the same idea, just on a digital space.
Right.
But now they're moving.
The thing that I remember within, I don't know, the last couple of years, like NBA Top Shot.
Yeah.
It was like a huge thing. And people are like, I don't understand why you would buy a video clip. Yeah. Like there's a lot of people that are just like, I don't understand why you buy a video clip. So why would you buy a video clip of a NBA star shooting totally a basketball?
Fair. Well, I mean, when you're dealing with just like collectibles like that, you would buy it almost entirely on speculation of like future price increase because of like the scarcity or whatever. But these are the really early days of NFTs. They're going to go into much more practical use cases, in my opinion, pretty soon. So like when you walk through that train of thought about what you can do with digital non-fungibility, it really opens up a lot of doors. So for example, like the way I think NFTs will probably go, kind of from like logical progression, would be collectibles initially, and then where we're at right now, which is essentially like the fine art market. So, and the value push there is essentially you have an entire $67 billion volume fine art market annually. It's this massive operation, and like digital or like artists, anybody that's trying to make money in media, they have a real big issue with like just copyright aspects and stuff like that. It's very difficult to keep your art in any really form from being from finding its like fair value price in terms of like the profit that you're generating off of it, whether that's like actual art, whether it's music, media, whatever. And so NFTs kind of solve that problem. They are proof of ownership essentially for any aspect in the digital space. And the fine art market is moving in pretty quickly with like auction houses like Sotheby's and Christie's. They're already auctioning off NFTs on a pretty consistent pace. And so I think this is kind of the second stage. Basically, fine art market moves in. There's a really big value push for the artists because the supply chain is entirely traceable. And so essentially you can code in royalty payouts. So for example, let's say you have an artist right now who's like young and is trying to get started, and in order for all of his art to not get scammed, he has to put all of his trust into some sort of third-party auction house or gallery. They buy up all of his art at like a really cheap price point. They set the price essentially for their sale, and then maybe he goes on to become a famous artist. That art trades hands a ton of times between like A and B, and maybe one day it's worth like a ton of money. He's only ever getting that first initial profit from the gallery house kind of ripping him off in the first place.
Right.
With NFTs, it's totally different. You can code in maybe like a 2.5% to 5% royalty is pretty standard. And every time that like NFT trades hands, the initial artist is getting 2.5% to 5% of that sale price essentially. And so it enables a way for artists in every aspect of art to keep closer ties and make more of a living off of their art without having to rely on these third-party intermediaries.
This is going to be the time where the artist actually gets to win.
Yeah, exactly. That's kind of what it opens the door for. And then, like, I think where we go from
You're not going to hear the term starving artist anymore?
Right, hopefully not. And then I think where we go from here gets even more interesting, because I think when you think about it, the fine art aspect is really just like a build-off on the collectibles aspect, but really, I think the main value push for NFTs in the practical world are much more traceable supply chains, tokenizing real world assets, so it's much easier to actually like buy and sell and trade real world assets with other people. It's as easy as doing it online. Companies can track every aspect of their supply chain. They don't have to come into any aspect of like not knowing where something's going for a delay. You could tokenize real estate. That makes it much easier to prove land titles, which is like a bigger issue in the developing world. And then eventually I think we'll get to the point where we start tokenizing things as abstract as energy on like energy infrastructure grids. And, you know, that'll enable like even like a single home to almost act as its own service provider and get monetary incentives for green energy use, because they'll have a certain amount of surplus tokenized energy that they could sell on the open market, stuff like that. So like, I think the next 5 to 10 years for smart contract NFTs are going to be really interesting. I think we're in the really early stages right now.
For a guy like me, who, you know, I'm married, I got 2 kids, 8 and 12. I've got a full-time retail business. I got a side hustle podcast. I got all this stuff going on. I'm super interested in all this stuff, but I'm like, man, I don't have the time to go and like learn it. And I mean, where for the average person to go and, you know, I just insulted myself. I just called myself average. You know, for the regular everyday American, not American, whatever, who wants to, you know, maybe incorporate like NFT into, you know, an NFT into their life, or maybe buy some of these, you know, pieces of art and be a part of this. Like where would you say for them to go? I mean, would I just be getting myself into trouble by doing it if I'm not willing to spend all the time to learn it, or is there?
Yeah, sure.
Do you understand what I'm asking?
Yeah, I mean, I think with where we're at right now, so the NFT market as an asset class, it's not entirely new. I mean, you could go back and make claims that NFTs have been minted on Ethereum since like 2017 maybe, but it didn't blow up as an asset class until really the last like 6 to 9 months. And that's just because the UI like has become much easier. Platforms popped up on Ethereum that make it really easy to trade and all of this kind of stuff. But honestly, like when you're trying to get into it with where that market is at right now, there is kind of a technical barrier to entry, I would say, because you can only trade this stuff on Web3, and so like accessing Web3, I don't think is as big enough. I don't think it's as big of a barrier to entry as most people think from the outside, because this stuff seems like really complicated, and in reality, it's really not. It just takes a small learning curve to kind of get the idea of what's going on and get the use case of how it works. But yeah, you would essentially have to, use some sort of multi-sig Web3 wallet like MetaMask, which just turns your browser into a Web3 browser. And then that opens up the door for any kind of decentralized application or decentralized autonomous organization that is built on top of Ethereum's smart contract foundation. The good news is that Coinbase just announced like 2 weeks ago that they're launching an integrated NFT marketplace into their platform. That'll probably come out maybe December, January. That'll really open the floodgates, I think, for retail without having to worry about any of the tech side. And so I think that would be the easy entry if the tech is kind of like, scary or something like that at first.
Super interesting stuff, man. What's been your biggest hiccup along the way? What's the biggest mistake?
Yeah, sure. In the startup space, we definitely had a ton of issues. It's kind of why I moved deeper into investing than startup, culture. It's always tough to like kind of juggle team dynamics and stuff like that, especially if like some success starts to come in. So those were issues like early on, and then like I've definitely made a ton of trading mistakes and like mistakes along the way in terms of trying to grow this portfolio. So there's been a lot of issues with that. Kind of missing the top for the 2017 run, that was a big issue. That took a decent amount to build back up from. But
did you dwell on it for a while? Is it hard not to like?
Yeah, probably, for sure.
I mean, I feel like when that stuff happens, or you miss out or whatever the case is, it's easy to like sit there and dwell on it. Or are you pretty good about just moving? All right, like that was a mistake. I just got to like move on. Like let's go. Like,
yeah, I mean,
get out of my own head. Like where are you at with that kind of stuff?
I think like at first it was definitely a lot harder. So obviously, a space as volatile and like innovative as blockchain, it just moves so quick and it has so many sub niches that it's impossible to keep up with everything, and you always feel like you're missing out on something. And so like at first that was definitely a much more difficult thing to kind of deal with. Now I'm kind of like desensitized to it, more so for sure. But yeah, it was an issue at first for sure. Any
tips on how to become desensitized?
I think it's probably just like time in the space, honestly. It's
experience.
Well, it's like if you have a big background in like equities or something, for example, trading like just stocks and managing stock portfolios, moving into a space like crypto, it almost seems like time is moving like 6 times faster essentially. So the cycles are, faster by like an order of magnitude. The volatility within the space is significantly higher. And so like there's a big kind of sensitivity to that increase in volatility at first, and then you just have to kind of get desensitized to it as you get used to the fact that that's just kind of how that market works, basically, because it's smaller.
I have to ask, because you got dual bachelor's degrees, right? In economics and philosophy. Where'd you go to school at?
Went to the University of Tampa because I was working in Tampa at the time, so I just kind of wanted to stay close to all the stuff I had going on there.
Okay. Would you say that your college education, was very beneficial to your life now? And
yeah, I mean, I don't think it was like super necessarily relevant for what I do for work right now, but it was stuff that I was like really passionate about, and I just like to learn for like the sake of learning. So like I definitely enjoyed it. It was I don't regret it or anything like that. I think it was great.
I like to ask just simply from the standpoint of, so many people are like, a lot of people trying to make that decision whether or not they should go to college or something.
Yeah, no, I'm like always doing like online, like schooling in some capacity. I'm going through like a online degree in my free time right now for like Solidity programming, which is like kind of the native coding language for Ethereum. I'm doing like a open course class on like CRISPR, like biotechnology, stuff like that. I'd love to like have the time to go do a master's. So it's like, I love
a passion for learning.
Yeah,
that's awesome.
For sure. And so, yeah, I definitely wouldn't regret college or anything like that.
Very cool. I have a passion for learning too, but I would never go back to school.
That's totally fair. I mean, you don't really.
I'm like totally done with school.
You don't really need to anymore. All the resources that you need are online.
Yeah. Are there any like particular resources or places that you like to go for information?
Yeah, I mean, like I do a ton of classes through like Udemy has like a ton of really good tech related open courses. MIT Open Course has basically all of MIT's curriculum just open source. So like I'll do a ton of stuff through them. edX. I mean, there's so many platforms online that are just digitizing like the best university's curriculum and putting it out there for free. And so, you know, if there's anything that you want to learn, there's definitely the best possible resources out there to just do it with no cost. It's kind of crazy.
How do you divide up your time? Like, because you seem like somebody who, you know, knowing that you're passionate for knowing that you are passionate about education and continuously educating yourself, you know, how many hours a day are you spending doing that? Yeah,
I mean, like I've been working probably like 14 to like 16 hours a day for like the past like probably like 4 to 5 months, just because crypto is in like a really important phase right now. And so keeping track of everything it just takes like tons of time. You know, like every 4 years, like more or less, crypto goes through these cycles, and then they're just the greatest money-making opportunities really in human history. And so when it comes along, it's like the Olympics, just like fucking like, or you're just like going for it at a really like high level and kind of dedicating all your attention to it. And so, yeah.
That's the phase you're in right now.
Yeah, basically.
You're in the Olympics. You're like
it's such
all
a rare
in, all
opportunity.
focus, so much trading involved.
Yeah, exactly. So just like trading and like market research, and then like all the like the things that I do on the side, just like kind of dividing that up through the day as well. But yeah, it's been pretty consistent, like 14, 16 hours for a while now. And it'll probably be like that until like February or March, I'd say.
Wow. Cool. With, so what brings you here? I mean, with Startup South, being out here in Collective and Code space, you know, we're in San Felasco Tech City. There's this pitching, sound like I said bitching, this pitching event tonight.
Yeah.
Are you here looking at why are you here? What are you involved with?
So Quan like invited me down here to like speak on a panel. I think I don't even really have all the details, honestly.
I love that, right? Like,
yeah.
Quan gets you out here like, dude, just come, we'll get you on a panel.
Yeah. And
share your knowledge with the world.
Yeah, he basically just said like for like blockchain related stuff. But I just took a role as a blockchain advisor for a startup that I think is based out of Collective & Co. also, called Starstruck. And so I think I'm down here partially as a representative of that, and then also for whatever this panel situation is that
cool.
it's talking about.
Well, whatever it is, we appreciate you contributing and coming to Gainesville from Tampa for the evening. And are you here tomorrow too, or?
I think so. Yeah.
Okay. Cool, man. Well, this has been a lot of fun. It's been super interesting just hearing all of the things, and congratulations on the success this far.
Thanks,
I look forward to seeing, how things turn out in the near future for sure.
Absolutely. Well, hey, thanks for having me.
Yeah. Where can our audience connect with you? Or, I mean, are you on social media? Do you share any of this stuff elsewhere, or are you?
Yeah, a little bit, not so much. I mean, I have an Instagram, but, I'm really not super
in your own
huge,
hole.
Not super big on social media right now. I probably need to dig deeper into that, honestly. But yeah, I don't know.
I don't know why you would need to.
I don't know.
No worries. Cool, man. Well, again, thanks so much for being here. This is awesome.
Yeah, thanks for having me.
And thank you so much to the team that makes this show happen. You guys, there's so much work that goes involved. I mean, we had to get the entire crew ready to get out here to Collective & Co space. We brought all the equipment. James brought the cameras and the lighting and all of the stuff. So, thanks, James, for everything that you do, man. Appreciate you. And Sarah finally got here. She had class in the middle of the day for some of our other episodes that we recorded, but she is here, and she's always keeping us on our toes and doing on social media, and definitely helping me manage the intern team. So thank you so much for all of your hard work. And thank you to our intern team, Trinity, Gianna, and Noah. You guys are awesome. Thanks for all that you do. Podcast fam, remember that you can find all the links to the incredible sponsors that make this show possible. I absolutely could not do this without them. Please support them. Go to whoagnv.com/sponsors to get connected to all of them. Of course, you can find their information in the show notes of the episode. And, thanks so much for listening. We appreciate you guys. We're in somewhere in the 170-ish episodes. I mean, I cannot believe that we've done this many episodes. It's continued to do so well. I'm so grateful for you guys. A lot of evolution in the podcast over the last 3 years, and I'm just really excited for where things are headed as we head towards 2022. Approaching the holiday seasons too, so just definitely want to say happy holidays to everybody as we get closer and closer and closer to the holidays. Enjoy that time with your families, and again, remember to support a lot of the nonprofits in our area that need it, just like the bread of the Mighty Food Bank, so please support them. And you guys, you've been listening to the WHOA GNV podcast, the podcast bringing you businesses and individuals that make you go,
whoa. There you go.
Whoa. He's like, whoa, you got it. You got the cue. He got it, you guys. Whoa. We'll see you later, guys. Bye.